Welcome back to Bazaar Morning Call. Well, for now, let's just get a couple of stock ideas going. Dipan Mehta, director at Elixir Equities, is joining us now to talk about the big moves that we've seen lately in many spaces, actually. Dipan, hi, good morning. The space I wanted to talk to you about was metals, because we've seen a big comeback here. Now, I know this is not one of your favorite, sectors to invest in, but from a trading angle, do you think that there is more to go here? I mean, JSW Steel, for example, is already up 10% this month.
Good morning, Sonia, and thank you for having me on your show. See, that's the characteristic of all these commodity stocks, that they have these very sharp trading rallies based on news flow as regards price or some global development, could be China, could be US, anything, and then the sentiment kind of changes, but the sentiment also changes on the toss of a coin as well. So it's very difficult to keep track of these metal companies, commodity companies, as to where they will be 6 months, 1 year, 2 years, 5 years down the line. And that's the reason, rather than wasting your energies on something which is so uncertain and so volatile, you focus on the more certain stocks where there's secular growth momentum, where the business models are understood better, where the managements have better control over their end product prices, their input prices, rather than the commodity stocks, which are just swayed by external factors. So keeping that in mind, we generally have had a negative view on metals, but sure, there could be trading rallies. And if you have that mindset where you want to trade the rallies, then you should understand these businesses better and the stock price movements better, and then perhaps you can make some money on it. But I haven't been successful on that count, so I generally always avoid them.
Dipan, hi, good morning. So many stocks, right? I was somebody jokingly told me, and this is a seasoned investor, he said, there are so many ideas now that I'm out of money. Not me, but the person I was speaking with. He said, I'm stopping any new meeting.
Even I'm out of money.
What do you do with all these ideas? You're fully invested.
Yeah. See, I'll tell you one thing, Prashant. Really, it just builds my conviction in stocks. We've been patiently waiting for so many quarters, waiting for the markets to rally. And mind you, small mid-cap stocks haven't done as well, over the last 4 or 5 years or so. I think right from ILFS crisis, I would say that at that point of time, the small mid-cap stocks have generally underperformed. The market rally has been very narrow, with either Reliance doing well or Adani stock coming into focus. Sometimes it's L&T, M&M, Maruti. But the mid-cap stocks, small-cap stocks have just been in wilderness. And now they are coming back strongly. The key characteristic here is that even small volumes, small purchases also can take these stock prices higher. I suspect a lot of money is coming into the portfolio management schemes as well. And these are the fund managers or portfolio managers who are very focused on mid-cap stocks. And they are buying the same stocks to kind of, keep the number of stocks in their overall portfolio the same. At the same time, I think a lot of HNI activity also has increased, and they are focused on mid-cap stocks. And generally, I think the numbers for mid-cap stocks have been very decent. These companies, these businesses tend to thrive when inflation is low, when prices are coming off and demand is generally strong. So you have a culmination of many positive factors, right from liquidity flowing into them to overall better business prospects, which is driving these stock prices higher. And valuations, I think, historical basis are still at reasonable levels.
And we have absolutely point taken. We had Prashant Jain yesterday with us, on closing bell, and we'll play out some snippets of that conversation. He told us that every month, he's getting about 300, 400 crores in fresh inflows. So money is flowing in through the SIP route, and I think, of course, to some of these investors as well, other structures as well. Let's talk about the brokerages and what you need to know in terms of what the sell side has written this morning. What are the stocks in focus? Sonal is here with those cues. Sonal, morning.
Good morning, Prashant. Well, let me start with Citi's Morgan Stanley's note on Indigo. They have an overweight rating with a target price of 3,126 rupees per share. All key earnings drivers are moving favorably for Indigo, and their market share gains could continue. Near-term profit per seat could hit a cyclical high, and that's why Indigo should be on our radar as well. Citi has written on JSPL. They have a buy rating with the target price of 650 rupees per share. They speak about the recent announcement by the company where they've announced diminution of its investment in JSPML of up to 7,780 crore rupees. They say the company had already recorded an impairment against this investment in Q3 FY23, so this is not a new update here. However, the investment has now been written down, resulting in tax benefits, so they will see some tax benefit here, but this was something which was already known and the company had already accounted for. Citi has written written on HCL Tech. They have a neutral rating here. They speak about the company seeing 4 big potential service opportunities in generative AI. That has been the big word now. Company has partnered with AI ecosystem and working on AI solutions with over 150 user cases here. Motilal Oswal has written on Sun Pharma. They have a buy rating with target price of 1,160 rupees per share. They say the specialty brands are seeing some promising growth, and specialty portfolio is building robust global franchise as well, and this is an outperforming segment for them. US generic sales are stable despite multiple headwinds in the global markets, and that's why they're bullish on the stock.
All right, thanks a lot, Sonal, for that. In fact, Dipan Mehta, who tracks this entire IT space very closely, I wanted his view on, the comment that Sonal was making on the brokerage report on HCL Tech, where they are investing heavily in this generative AI space, and there's a lot of opportunity here. This is the new buzzword, right, Dipan? Anyone and everyone is investing, but it's kind of like, a space where once you get in, you realize what the pitfalls are. It's not easy to make money here, especially in AI tools. Tell me a little bit about the companies, the listed entities, where you believe that there is scope in this space.
Sona, I suspect that even this AI opportunity and the related kind of projects which come through, the mid-cap, small mid-cap companies will benefit more. And, we had this Happiest Mind Management on your show the other day. I think it was exactly last Thursday. And the question I asked them is that why are small mid-cap stocks doing better than large-cap stocks in terms of growth rates and therefore valuation? And he made a very pertinent point that a lot of these projects are small-sized projects, and they are projects where mid-cap companies have an edge in terms of technology, in terms of talent, in terms of the agility with which they can execute these projects. And these small-sized projects, $20-30 million projects, can make a huge difference in the growth rates for a mid-sized company, but it won't even move the needle for a HCL Tech, Infosys, or TCS. So the real problem with within the IT space is the large-cap stocks are so huge, and their revenue base is so high that smaller projects, even if they are, in this particular space, will not make much of a difference. They typically need a kind of a nice economic environment, positive growth rates, sharp increase in tech spending, and a lot of these type of $300 million transformative deals for them to sustain those kind of growth rates. Therefore, my view on large cap stocks is negative. But in mid-cap stocks, on and off, you will keep finding winners. And look at the number of mid-cap stocks hitting new highs. I mean, can you believe that US is in this kind of a shape? Economically, Europe is in such bad shape. But you have at least half a dozen mid-cap stocks which are at or around their all-time highs. It just shows that, the maturity of these businesses, and they've clearly found their niche and space. So I want to focus on mid-sized companies. You can look at the names separately.
Okay, got that. Dipan, stay on. We'll have some more questions for you in just a bit. But
Mehta is with us. Dipan, just a quick word on names like V-Mart. We had a very large move yesterday, 7-8%. And in the blocked data, we learned that Amansa has picked up shares. Tira Price sold and Amansa picked up. Amansa is already a 7% shareholder in V-Mart. I mean, it's a share which has not done anything at all. I mean, it's languishing at lows. What are your thoughts? I mean, it's not in the favored list at all. The consumer sector is hurting. It caters to the tier 2, tier 3 cities. But does it make sense at lows?
Yeah, Prashant, I think that it's only a matter of time before the demand comes back in the tier 2, tier 3, which are very much dependent on monsoon and agriculture. And already on the FMCG side, we have seen a revival in the rural demand. And if that is to translate into demand for retail companies like V-Mart, then it's just a matter of time before V-Mart also starts to report better growth numbers. And, this is a very interesting company, a very aggressive management. They know exactly where their position is. They have very strong competitive strengths also. And this entire trend towards premiumization, consumers going towards brands and moving up the value chain, I think all of these trends certainly benefit V-Mart. Very strong balance sheet, and they can keep on expanding further and further into their territories. And the acquisition of Unlimited also opens up new opportunities, and that also the synergy has not been realized fully. So generally positive on V-Mart, a disclosure that we and our clients are invested in it. But it's more of a longer term horizon over here. But I think 1 or 2 quarters down the line, you could have a positive upside when it comes to the financials.
All right. Well, Dipan, just stay on. We'll come back to you in a bit. Nitesh.
Dipan, hi, morning. Didn't get a chance to, check one specific stock with you actually, and that is Persistent Systems, because suddenly there's a lot of negative brokerage commentary around it. Brokerages saying that this one is most exposed to discretionary spending, and given what we've seen from EPAM earlier, maybe there's a case to take some money off the table. What do you think?
See, I think these minor negative news flows will keep on coming and going, and they shouldn't kind of shake out the long-term investor, because clearly Persistent Systems have been one of the best performing stocks. One of the best performing stocks. So from that point of view, I still remain invested in it. And as I said, I think aggressive management, smaller project sizes benefiting them. They have certain very specific skill sets which they offer to their clients, and they have clearly established their reputation and space within the IT industry. So I remain very positive on Persistent Systems. Sure, there could be a period of underperformance, compression of P multiples, maybe even one or two soft quarters. But the basic business model and the kind of value they bring to their customers, that remains exceptionally strong. So we would like to remain invested in the stock.
Okay, so you're saying you remain invested in the stock, but actually just wanted to put Ambit's view on board, because this morning Ambit has initiated a coverage with a sell, and I guess that was Surbhi's reason to ask you, because the last 2 days, two brokerages have come out with cautious commentary on Persistent. Ambit has a target price of 4140, and they talk about how growth will slow down in FY24. They're saying that the company has an 80% exposure to the slowdown-prone BFSI and high-tech segment, and short-cycle deals are seeing a pullback now. Also, valuations are pretty expensive at the moment. The stock is trading at 30 times 1 year forward, which is a 51% premium to its tier 1 tech stock. So I take your point on board, Dipan, that of course the long term is favorable for Persistent Systems, but in the shorter term, there are some concerns that brokerages are raising. All right, we'll come back to you in a bit. I want your thoughts on defense stocks as well, because that's the other big buzzing space.